From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi, welcome. I don't know where I was just there for a moment. I'm Nadine Blaney and this is the COB.
And I'm Danny Akuye. And I'd been hoping that we were going to get a bit of a rally, and we did, but it's all petering out, which is just too sad for this Monday.
Yeah, okay, so, well below 6,800. We did have retail sales released today.
Yeah.
They came in hot immediately after. I spoke with Sean Lenkake from BIS Oxford Economics saying, really that just firms up the case for an interest rate hike coming next week from the RBA. So it's hard to get too enthusiastic, especially when he went on to say if they hike once, it's his assumption that that would mean that they would hike again. Ooh. So if you're going to do it, you're going to do it now. So he's saying perhaps November, December now. And he put, and it wasn't just the retail sales, obviously, it was the inflation read as well. So that's what investors are facing.
Well, it is. It's a huge headwind at the end of the day, because clearly if we do get another 50 basis points, it is really hard to see how the average Australian is going to cope with not only all these rising costs, but if you do have debt, and Australians do have a lot of debt, well, it's not going to be a very ho-ho Christmas, is it, at this stage?
Perhaps not, but we were spending in the month of September up 0.9%. Apparently the spring weather.
And the Matildas.
I love that. That was from Endeavour Group. That's one of the corporates we'll be talking about today. We're just really bracing for not just the RBA next week. I mean, think about it this week, Danny. We've got three central banks. We've got the BOJ, we've got the BOE, but we have the FOMC.
Yeah, the big FOMC. And obviously it is very much, I think, markets are not looking for a rate hike over there, but clearly again is what is Jay Powell going to say? And let's face it, even if he's not going to hike again, he's not going to come out and say, oh, I'm not going to hike again, is he? So it's by definition, it's probably going to be a little bit more on the hawkish rather than the dovish side. And
we do know that share markets have been coming under a lot of pressure, including our own. I mean, the energy sector really getting hit hard today. We'll go through some of those in a moment. Financials, the banks were down, interest rate sensitive stocks. It doesn't take a genius to figure out that one. Qantas, I was watching its share price reaction earlier today. Let's just see where it looks like it will be closing.
It was positive.
It was up about 1% at lunch as the last of the day's trades come through this market, up about 0.8% right now, because it, it came out with its defense into the fee for no service.
Yes, we just, you can't expect to have your plane leave on time.
Or leave it all.
Or leave it all.
And it's legalese, but they did say, legally speaking, you're not actually buying a ticket for that flight at that time on that day. So
it's such a bizarre concept, isn't it?
Well, I guess they've said that, their systems, if they would have canceled all those flights at once, wouldn't have been able to handle it. It would have been a bigger mess. So not their fault, and they didn't do it financial gain. We'll see if it'll fly with consumers, because it's the reputational damage, right, that we're really talking about.
It kind of looks potentially as a big "the dog ate my homework" situation. But we'll see, as you say, what the courts have to say about it.
Exactly. Look, energy, as I mentioned, we did see the price of oil coming off it's interesting because it just spiked on Friday in the Middle East.
Yeah, and it's eased by about 1% today. I was just chatting to Daniel Hines at ANZ, and he really, really feels that the energy markets are not discounting the sufficient risk that's sitting in there at the moment, from his opinion. He feels that rather than like the 4% premium that's been put into crude prices, should be closer to closer to 10 to 15%. So they've got $100 US dollar a barrel target. And it's just interesting because when we're looking at the conflict, it has grown on the ground. It's awful, absolutely horrible what we're seeing. But oil markets are very much like this is a bit of a yawn.
Yeah, well,
until it's not.
No, I suppose so. But I did speak with an analyst last week. Slips my mind right now. It's up online. And he said historically you do see a spike when there's tensions, war, but then it retreats quite quickly, and over the longer term, war doesn't actually have that much of a positive impact on the price of oil. Look, that being said, we'll keep an eye on these guys. I was a bit surprised to see, consumer staples being one of the worst performing sectors.
And Woolies continuing to be hit, as well as Endeavour Group, which came out, didn't they, with some quarterly results, which on first read didn't look too bad, but I think they are experiencing the consumer continuing to trade down.
There's that value.
Absolutely.
Cost of living. I'm sorry, but I got my electricity bill the other day and got
nearly
quite
died.
the shock. Okay. We'll move on from that. Still a touchy subject. The other thing was I called the provider and said, I'm on the lowest package. They said, oh, no, you're not anymore.
Oh, oopsie.
You've got to continually call us to make sure you're on the lowest package. Anywho, that will remain nameless, listed Australian company. Banks, real pressure coming through here today. NAB at one point was down more than 2%. Danny.
Yeah, and they've got, obviously, we've got ANZ, NAB and Westpac. I think they report in November, do they not? I think they will be coming up. Macquarie reports this Friday, I believe. But yes, following like US banks, you think our banks are bad. My gosh, go across to the US, much weaker. But also let's check in with the technology sector, because
lo and behold,
Xero had an upgrade today.
Coming from Jefferies.
Jefferies, exactly, around $122.69 or 63 cents from memory, the price target there, and a buy. And also WiseTech Global, but poor old Block continuing to be under pressure. But what were some of the top corporate stories?
Well, we've touched upon them a bit.
Yeah, we have touched on them. IGO, they reported, didn't they?
It was a quarterly production report coming through, and they are expecting lower production in some of their key commodities. St. Barbara came out. It was a little bit convoluted. So they've done this strategic review. And so they have basically said that some of their mines will be roughly cash flow neutral. I think it's all their mines in FY24. So it's a strategic review that's being implemented, organizational restructuring, corporate costs expected to come in between $9 and $11 million annually. So, but the market really not liking that update. And Ramelius maintaining its production guidance, saying it remains on track to achieve its full year guidance. And there was another gold miner that I thought we should take a look at. I think it's on the next page, called Tietto Minerals.
And it was subject to a takeover offer, and off to the races, up by 33% almost. And I do know Adam Dawes from Shaw and Partners, who is suffering from, I suppose, broker malaise at the moment with the markets, was very excited to see this one run off to the races today. We don't know what's going on with Star Entertainment, but off by over 8%. And what's happened
Regal
there?
Partners, well, it's confirmed that it's making a play for PM Capital, but taking about a percentage point off of its share price today. There were a number of little small caps that were giving updates. So Frontier Digital Ventures was one, Beam Communications, Before Pay, I chatted with them on the small caps. But the stock of the day was Adore Beauty, also updating the market. Let's listen into our guest's analysis.
I guess the concern that we have with not only Adore, but many of the other companies in the discretionary retail area is that it is discretionary, and that we are in a period where we've got high interest rates, high inflation, and it's one of those areas where people have the ability to decide whether or not they're going to spend money on it. So that's probably our concern that we have. It's not actually a stock that Ords covers, so we don't have an official research coverage on it. But as far as the overall consumer discretionary stocks are concerned, we are fairly cautious on them. Adore, as you said, came onto the market with a lot of fanfare. They've come down a fair bit since then, but it is still unprofitable. So it's probably one that we'd be steering clear of at this point in time.
So the same customers, but I don't see a lot of growth here. I mean, for the last 3 years, it's been pretty subliminal. If you look at the market cap, it's a micro cap, it's 87 million.
Right.
And the average daily turnover is like $27,000.
Oh, okay.
Worth.
So it's really thinly traded as
really
well.
Small. So this would not be an institutional investment for institutions, that's for sure. It's just very small retailers. So it's really an avoid as far as I'm concerned.
Right.
Well, not a lot of love there, were there? No, and I must admit, there is another big competitor in the market, which isn't listed, Mecca.
Yeah.
And you go into Mecca stores in the eastern suburbs of Sydney. Oh my God, you can't get served. So that's the only thing I'll throw out there.
The funny thing is that, when you talk about the online offerings, I know Claude Walker comes to mind from A Rich Life saying, you just buy it cheapest online. But Mecca has become a mecca for beauty lovers. Same as Sephora. I mean, people like going there. They like going into the shops.
Yeah, the girls get made up. Yeah, anyway, we won't go on. So we better...
Josh Gilbert.
Exactly, introduce Josh. Hey,
Joining
Josh.
us from eToro.
Hi, guys.
So this market looking pretty weak, really lackluster, below 6,800. Technically, what's going on?
Yeah, hitting what was 12-month lows today on sort of the ASX, and I think we're heading for sort of the worst month this year if sort of we close out around that sort of 3.5% month mark tomorrow. I think the market is obviously pricing in, that the bad news of this expectation that we're probably going to see another hike from the RBA, and potentially this conversation that, is there going to be more than one hike? Because, go back a couple of months and we sort of didn't expect to see, another hike, all of the sort of big four sort of really saying that we'd seen, all that the RBA had to sort of give, but now that is sort of changing. So I think that's really put the market on the back foot, especially in the last couple of weeks. Throw in, what is obviously geopolitical tensions, obviously rising yields as well, which I think the market has done well to sort of not sell off before this time with sort of rising yields over that time as well. And then obviously then go into, higher for longer narrative, still got rates further to go, then, I don't think it's really a surprise to see markets on the back foot as much as sort of they are. US futures, though, did have a little bit of positivity today. We had some good news from US PCE on Friday. That's put US futures on the front foot, as I say. So maybe we're on for a bit of a better week this week, but it's not a great start for the ASX.
I guess the whole question is October's often pretty weak, and this October is living up to that. But we do sometimes have that rally into year end. Is it kind of a slipping away like the boat on the horizon that's disappearing at the moment, Josh?
It feels a little bit like that, doesn't it? Yeah. I mean, we're still confident on sort of markets going into sort of year end. We say that this is the best time of the year historically. Q3 is the best time of year, especially for sort of US stocks. Again, I think it's particularly if we're going to take a lead from the US from locally. So if the ASX is going to take its lead from the US, I think that the last 2 months of the year should be a little bit more positive. I think we're getting to the point now where we're getting to, oversold territory. There's going to be some bargain hunters, I think, finding some value around these sort of levels, particularly in US stocks, the S&P 500 into correction territory last week with that close on Friday. So I think there's going to be some bargain hunters there. I think they're going to see some opportunity with this recent weakness, especially, as I say, with that US PCE reading. It showed that inflation in the US continues to subside. The GDP reading obviously came in a little bit hot, which maybe signals the Fed can go higher if they want, but they haven't so far signaled that is what they want to do. We'll obviously find out this week, of course, when they meet, but so far I think that it's good news for the US. I think they're in a better position than probably where the RBA is at the moment.
Yeah, okay. So FOMC, you've referenced that at US earnings, Apple, Thursday. What are you expecting?
Yeah, big week. Look, I think last week obviously set the scene a little bit for tech. I think if you miss, like Alphabet did, you get punished, pretty badly. And if you beat, as expected, then you do sort of get rewarded as sort of Microsoft did. But I think the sort of the misses really outweighed the beats. I think we saw a bit of weakness from Meta. Meta's report was actually pretty decent, but it was that sort of guidance in sort of the conference call afterwards that sort of sent it a bit lower. I think the release of the new iPhone is obviously coming at a great time, I think, for Apple heading into this. But I think it's going to be that level of demand. How are we seeing demand? Reading some sort of reports today that actually there's some fears over demand in China, which is a super key market, losing a bit of market share there. So, that could really have an impact on sort of earnings. I also want to hear a little bit more from Apple in terms of AI as well. They've kept their cards very close to their chest when it comes to sort of AI. And we're starting to see companies now, report success with their AI ventures. Microsoft was the clear, with the clear evidence of that last week. They're really starting to monetize AI. So I'd like to hear a little bit more from sort of Apple. We heard a bit more from Meta as well last week on that. Also services revenue, that's services revenue is really key. So services revenue, we're talking App Store, Apple Music, that side of the business. That's going to be really key. That's the fastest growing segment. However, I think that is very heavily focused towards consumer discretionary. That's going to be a very discretionary part of the business. And obviously with slowing sort of consumer demand, that's going to be, an interesting part to sort of keep an eye on, because as I say, that is the fastest growing part of the business at the moment. So look, I think it's going to be a bit of a barometer for the week. And I think if we do have a good report there, I think it will give a bit of a boost to the tech sector that we sort of really do need at the moment.
Absolutely. Just looking at geopolitics, the oil market seems to be fairly sanguine. Gold, however, is a bit more punchy. Do you think investors are just too relaxed about what's going on there at the moment, Josh? Or is it that historic thing that the shock at first, but then eventually the situation resolves itself? Because the headlines are the headlines are ghastly.
Yeah, look, I definitely think there is, we're seeing that sort of nervousness from investors, but I don't think it's, panic stations just yet. As you say, gold has sort of been that go-to safe haven in this sort of current sell-off. We were back above $2,000 an ounce this morning when I sort of was looking, and I think that it's outweighing and outpacing sort of other traditional safe havens such as the US dollar and bonds as well. But I think, I feel the reason maybe why markets aren't worrying about it as much is I feel that this is maybe sort of the new normal that we're getting to, whether that's from economic policy, geopolitical risk persisting. It feels like a little bit of the new normal. So I think that demand for gold as a safe haven, I think that might continue. We're seeing gold as well being supported by, record levels of buying from central banks as well, led by China, particularly in that. Obviously, we saw gold miners do pretty well on the local market today. But I think, there is obviously a level of nervousness from investors. Geopolitical tensions, as I think I mentioned last week, have had limited impacts long term on markets. So I think that we're going to see that initial impact. We're going to see that sell off. But I think that the last 2 months of the year should offer a little bit more positivity, especially as we've got into correction territory now.
All right, Josh, it's been good of you to join us today. We like seeing you on a Monday. Have a good one.
Thanks, guys. Take care. See you soon.
Josh Gilbert from eToro. Let's take a look at some of the market leaders, shall we, Danny?
Absolutely. And let's get across. Ingham's, looks like that one, I don't know.
There was no news associated with
it, honestly. Yeah, maybe it's a bit defensive.
Same with that Nine Entertainment. I mean, that's up by 2%. No news there. At one time today, just on the gold thing from Josh, it was all gold miners. So it's interesting to see that it's
rotating a lot at the moment. And I was looking at Sarah. I don't think there's any new news, and ditto with Goodman Group, but all in the green, which obviously on this down day we will take. Shall we have a look at some of the laggards? And IGO responding to that report, the quarterly report, down by over 9%. Star Entertainment, no new news. Don't know. Cromwell Property always pops up, and I must admit I'm none the wiser.
Well, it is trading well below its net tangible asset value, and it actually came up in a conversation today with a gentleman from Morningstar, Alex Phineas. He's actually in the COB newsletter, that interview, or you can find it online at ausbiz.com.au. So he took a bit of a deep dive into the REIT space. It's really interesting. Talking about yields on offer in the bond market. Why would you take on risk with commercial property? But he fleshes it out, names some of those that are likely to perform even in an economic slowdown and even despite bond yields rising. So I think it's a worthwhile one. But just strange that it came up this morning, and now I'm seeing it today.
And also just worth highlighting that the hedge fund manager who had been the activist investor, he offloaded half of his stake in Whitehaven. Right. So that's probably why that stock is off by almost 5%.
Small to mid cap space. Let's take a little look at the leaders. Tietto Minerals.
Yes.
That's punchy.
Take the 33%. Otherwise, or Banda Mining, who knows, up 23.
Let's flip the page, see what's on the laggards list in this small to mid cap space. St. Barbara, it was featured as one of our corporate stories to watch. I don't know what's behind any of the other moves, so we'll leave that there. But Pantoro, Neo Metals, Base Resources, and Clover Group also trading well lower.
Yep, absolutely. So let's check in and right. That was confusing.
Yeah.
We'll get to what's happening overnight. And apparently we have Japan's flash CPI reading and Germany's preliminary GDP reading.
Yeah, we've also got the Dallas Fed, I do believe, coming out tonight. And tomorrow we've got those PMIs picking up in China, which will be really an interesting one. I don't think that the beginning of the week is as exciting as the latter part of the week will be when it comes to rates and economic activity. But we've got McDonald's, Lowe's, we've got a number of companies reporting tonight as well.
Absolutely, and that will be very interesting. I'm just noticing HSBC has announced a $3 billion buyback as elevated interest rates boost growth. So it'll be interesting to see whether or not that gives some of the banking stocks a boost in Europe and potentially the US.
Yeah, the pre-tax profit for HSBC more than doubled, but did miss the estimates on costs, actually. Other than that, Danny, it's sad to say, but I can't help thinking that whatever happens in the Middle East, we've got Israel absolutely pounding Gaza's north,
just horrendous.
Really stepping up that ground assault. So we'll see the impact, obviously the humanitarian impact and, the impact around the tensions in the Middle East, but also key asset classes that we track here.
Absolutely. And let's just check in maybe and see how the market has closed. CBO 200 off by almost 12 points or 0.9%. ASX 200 off by 54 points or 0.8% at 6,772.
It is just worthwhile to note that those E-minis, S&P 500 and NASDAQ, still really positive.
Yep.
So watch that. Also a little bit of positivity around the region. In China, so we'll see. But the local market has closed down by 0.8%, 6,773.
Absolutely. Well, I guess that's a wrap, isn't it?
I think it is for a Monday. We'll call it a day. Thanks for joining us, and catch up with anything online. Subscribe to our newsletters, and of course, we'll see you at 9:30 tomorrow morning.
Have a great evening.